Athleisure brand Athleta. Shares higher today, but down about 20% over the past 3 months. And management saying on the call, tariffs could significantly affect operating margins and financial outlook. Gap not alone. Other names like Best Buy, Walmart, Target also flagging trade headwinds and rising costs in the recent reports. But my next guest says some retailers are passing along prices quietly and that consumers aren't pushing back. Joining me now is Loop Capital's Anthony Chukumba. Anthony, thank you so much for being here. You know, in a way, I'm somewhat surprised that consumers are not pushing back more because we've been dealing with inflation for so long and it is so prolonged. Maybe there's just some assumption it's part of the course until maybe it isn't. Is there a point at which you think consumers say no more, we cannot take any more, and they actually change their demand, buy a little less?
That's a good question. I'm not sure what the catalyst would be for that. I mean, maybe if inflation got really, really bad again, that would happen. But I will tell you, we're just not seeing that pushback right now. And I think part of that is a couple of different things. First off, the consumer is working. Inflation has come down some, and wage growth is actually pretty decent. It's actually been ahead of inflation for over 2.5 years now, so their purchasing power is better. And the other thing is, it's not like, well, some retailers are raising prices, but others are not. I mean, retailers are pretty much raising prices across the board, so the consumer, to some extent, feels like they don't have any choice.
Do you think that any of the sell-off was overdone, say, with shares of the Gap? They actually have been making pretty good progress. If you look at sales, and yes, obviously, they are getting pressured from tariffs, which is where we started this conversation, but isn't everyone?
You know, look, so a lot of the companies that I cover have seen pretty big runs in their stock prices year to date. So we had a number of companies that actually beat numbers for the second quarter, raised guidance, and the stock still sold off. And I think that a lot of that had to do with the fact that more and more bullish expectations are being priced into a lot of these stocks.
What do you think it means for holiday going forward? I mean, a number of retailers did detail their inventory as they have to, it was higher, up about 9% at the Gap, for example. And they said, yes, part of that was a pull forward of receipts. Do you think that that is going to cause troublesome going forward in the rest of the year, having too much inventory on hand?
So, look, normally retailers having a lot of inventory on hand, it is something that can be a warning sign. But I think in a lot of cases, retailers are doing exactly what the Gap did. They are pulling forward inventory receipts ahead of potential tariffs. I think it's absolutely the right thing to do. In terms of the holiday selling season, I mean, you know, look, we're a few months out, but the back to school results that we have heard about have been quite strong. And that's usually a pretty good precursor for the holiday selling season. So I am not worried about retailers' inventory positions ahead of the holiday selling season. I think in this case, more truly is more.
We'd love to have you on for some actionable ideas. And as I scan your favorites, it looks like the eyes have it. Can you explain some of your favorites here and why?
Sure. So my two favorite ideas are optical retailers, National Vision, ticker symbol EYE, and then Warby Parker, ticker symbol WRBY. Now, a lot of that has to do with the fact that there is a fair amount of macroeconomic uncertainty, but here's the beauty of eyeglasses. They're a non-discretionary medical necessity. National Vision is the low-price leader in terms of eyeglasses. Their biggest concept is called America's Best Contacts and Eyeglasses. Their opening price point offer is 2 pairs of eyeglasses and an eye exam for $89.95. No one can touch those price points. They're in the middle of this initiative right now where they are upselling their managed vision care customers. So basically just customers who have vision insurance. Historically, they sold them to them the same way they did their cash pay customers. That doesn't make a whole heck of a lot of sense. Turning to Warby Parker, I call it my set it and forget it idea. They have a very compelling consumer value proposition. Single vision lenses starting at $95. They've got incredibly beautiful stores. They've got a very long square footage growth runway ahead of them. They have less than 300 stores. I think they can get that to 900 stores. There are 45,000 optical stores in the U.S. More than half of that is owned by independents. So they're just going to continue to take market share.